And secondly, uh, we will learn about the positive and the negative side, which means the uses and the limitations of income statements. So this business, clearly its name is Amore. That's a trading business, and we call it this till this amount, till gross profit. We call it the trading account. Okay, so the trading section means it's the section where you calculate the profit from only the selling of the goods, and after the gross profit till the net profit. This section is profit and loss account. So altogether, we call it trading and profit and loss account, or in other words, we also call it income statement. So now, how it's going to be different for the service businesses. When we talk about service businesses are, for example, schools. Since they provide educational services, they don't sell anything, like banks, hospitals, medical services, insurance, or insurance companies, or hairdressers. All these businesses are not trading businesses. They are service businesses. They don't sell any products. They don't do any buying and selling of the goods. Yes, they buy goods, but to use and in order to provide services to their customers. So now, if we see their income statement, you will notice that there will be no trading account. There are no sales, there is no sales revenue, there is no cost of goods sold. So if clearly in a service business, there is not going to be any trading section. So there will be only two sections, then that is the income section, and this is the section for expenses, and then you can calculate the profit. Why there is no trading section? Because they don't sell any goods. Profit calculation, it helps overdrawing and cash shortages. Profit calculation helps to convince investors to invest in your business. Similarly, convince the banks to give you loans. And manager can look at their performance. If we are making a loss or if the profits are falling, managers can take some corrective actions. What else? Managers can compare performance over time. So I can compare the profit or the performance of 2020 with 2019 because I want to see whether I have performed better than the previous year or worse than the previous year. So how they make comparisons, they can compare the profits. So this can help you see if the profits are falling or rising. If the profits are rising, it's very good. But if the profits are falling, that's an area of concern. Now, the manager can look for the reasons. Similarly, they can compare the revenues. Why revenues are falling? They can try to investigate, and managers still at the end can take some actions to improve. Thirdly, you can also compare your expenses. Expenses are like, we know expenses like electricity, like rent, like salaries, wages. If we can compare our expenses, it means that if we see that the expenses are increasing, we can take steps to cut down. So this is all this information that is in the income statement can be used by the managers to improve the business performance. Any questions? Okay, yeah. So let's say these are two income statements for 2012. One is for 2013. Now, as a manager, I can compare my revenue. Clearly, it shows that my revenue is falling. I will try to find out what's the reason why my revenue is falling, and then I can take some action. Similarly, I can look at my cost of sales. My cost of sales are constant. I can push for the next year to get some discounts from the supplier and try to bring the cost of sales down. Since we are living in the age of internet, there are a lot of suppliers online. I will try to get the same quality in a lower price perhaps, or try to convince my supplier to give me some discounts. Similarly, if I look at the expenses are falling. It's a good sign, but I can again take a look on the list of the expenses and try to cut down wherever I can. So this can help me to improve the profits. So see, it clearly shows that my performance is declining, my profits are falling. It's not good. So this can make me alert. Imagine if I don't look at this, I might live without even noticing this profit, and I might become easy with the situation. But this income statement will remind me that I need to take action to improve myself. So this is a source of motivation, you can say. So this is basically in support of this argument, where I can make comparisons and I can take corrective action as a manager. What is the negative side? First of all, if we look at the income statement, it's just numbers, or you can say quantitative factors. It shows sales, it shows costs, expenses, profits, but it doesn't show the qualitative factors. Nowhere in the income statement it shows customer satisfaction. It doesn't tell me anything about how satisfied my customers are. It doesn't tell me anything about the motivation of the employees of a certain business. It doesn't tell me anything about the reputation of the business. So in case if I'm an investor and I move ahead to invest in a business, or if I want to buy a business, I'm looking at the income statement. Income statement is not giving me this complete picture. So for all this information, I need to search more. Income statement will not give me the complete picture. And when I talk about the falling profits or increasing profits, it will never explain the reasons. So if I go to the previous slide where we were taking a look at an income statement, so net profit is falling. It doesn't explain why it's falling. Sales revenue is falling. There is no explanation why sales revenue is falling. So if let's say it's good that expenses are falling, but there are no explanations. These are just numbers. So to get those explanations, I need to search. For these explanations, I need to do more investigation as a manager. Investigation means research, and we know that investigation and research takes a lot of time. So that was about the limitations. The summary is, number one, benefits we can start with the calculation of profits. It's an indication of performance. Why indication of performance is necessary? Because sometimes we want to attract loans, we want to attract investments, and in certain cases, we need to take corrective actions. This allows comparison. We can compare income statements from different years. We can see if we are worse than the previous year. In case if we are, we can take some corrective actions. So when I talk about limitations are it doesn't show qualitative factors. An income statement doesn't talk about the customer satisfaction, employee motivation, or if there are any environmental problems from the business to the community. It doesn't talk about anything. Or if the business is suffering from bad reputation, income statement will never show that. So in short, income statement never gives you a complete picture, and it lacks explanations of falling or improving performance. So it doesn't tell you why your performance is falling. You need to find out as a manager. So overall, yes, there are uses. We cannot deny the uses, but for these limitations, simply we need to do more research. The conclusion here is we cannot rely on the income statement alone. We need more information to reach a conclusion about a certain business.